The US dollar continuing to pull back then after apparent soft jobs report. Markets getting sucked into the actual NFP headline in itself, which saw less amount of jobs being added to the economy. When you have a look here, it was 57,000 and the previous revised down from 172 down to 129. But let's not lose sight over the fact that the unemployment rate still remains low at 4.2% and average earnings still remains elevated at 0.3% in terms of wages. So market just getting sucked into one figure, but the overall view is that it's still inflationary. But looking at the facts is that markets have sharply dropped their rate hike probabilities for July. Okay, September, October, and December have come down, but it's still probable that we're going to potentially get as many as 3 hikes, the way the markets are pricing it in the moment. But look, for me, it doesn't change anything in terms of breaking the structure. What would break the structures if we get in a couple of weeks lower CPI data? Well, it's just in over a week from the United States, not next week, the week after, but would force us to break out of this structure. But right now, it could still be forming a higher low for a continuation to the upside. Okay, but most looking very likely that the dollar's going to continue to pull back. Maybe next week we consolidate and hover around the structure, around this key area of liquidity before we get that commitment, which would likely be CPI. It's my thoughts. I have some specific ideas around that and how we're going to look to trade that in terms of playbook next week. But if you want to get ongoing analysis, all that good stuff, trade ideas, breakdowns, reports, value, please, you can check out that via the link below. Please, you can get that for free. In addition to our education for life via one of our partner brokers below. Catch your next update.